start.
Hello and welcome everybody in the audience. Today we have another exciting panel entitled The Digital Euro Landscape, a Status Update. With me are renowned experts in the field of the different forms of the digital euro that exist currently, not just within Europe, but also beyond that. A very interesting setup indeed, and only one of the few very interesting news that are coming out from that specific topic recently. And this will be the topic of today's panel. Before we get kicked off, I would like to turn it over to our panelists to introduce themselves. And before I just do that, let me just say that all panelists here are present in their personal capacity and do not necessarily reflect the views of their employers. Rather, they are reflecting their own. Mark, why don't you kick it off?
Thank you so much, Sarah. Thank you for having me here today. My name is Mark. I'm a senior manager with Define. We're a European consultancy with a focus on analytical, quantitative, and tech problems. So we mostly hire people like me, physicists and mathematicians with a strong analytical focus. We work with clients along the whole value chain, from strategy all the way to development of solutions. And I guess I'm here today because of the project experience I bring. It all started out with tokenization for me, and we had to figure out how to pay for tokens, how to combine euro payments with tokens on open blockchains. And I guess we've come a long way since then. In the meantime, I've been participating in pay-per-use projects based on DLT, research papers on wholesale CBDC, and white papers with the DEA here on stablecoins, but also a lot of research for our clients on the impact of MiCA, the impact of the digital euro. And most recently, and perhaps most importantly for here today, is the ECB trials. We're supporting several clients of ours with a participation in the ECB trials for all the three different solutions of the regional central banks. And I'm excited to speak about all of that here today. And I'm handing over to Roberto.
Hi, everybody. Thank you for inviting me on this panel. My name is Roberto Bagliari. I work at Commerzbank in the DLT lab. I'm responsible for a team that focuses on DLT-based cash, cap markets and treasury solutions and use cases. We provide advisory services to customers interested in DLT. We guide our managers internally and business internally on DLT topics. We provide research, so market-based research, and we also incubate systems that we invest in that we want to bring into the house. Pass on to Jochen.
Thank you very much. Joachim Schwerin, Principal Economist in the unit responsible for the digital transformation of industry in the European Commission. I've been working in the blockchain domain now for more than 10 years, basically being responsible for the real economy applications of DLT for industry, small and medium-sized enterprises, etc. We have a long history of activities, not only in the financial domain, also in the real economy domain. I'm currently launching, or I've just launched a study on DAO governance, for example. We also have a lot of blockchain infrastructures already in development, or like with the anti-counterfeiting in place. Today, of course, we focus more on finance. I've been involved in the drafting of the MiCA regulation, as well as on the legal basis of the digital euro project, which we published in the summer of last year. My perspective, as said, is more the blockchain perspective, especially also from the use case perspective of what industry needs. Of course, that is a broad field of discussion, especially when we talk today about the digital euro, more perhaps a digital euro, because there are many different alternatives. So looking very much forward to the discussion, and hand over to Cyrus.
Thank you. Thank you for having me. Yes, I'm Cyrus de la Rubia. I'm Chief Economist of HCOB, Hamburg Commercial Bank here in Hamburg. And I'm doing research on crypto, on blockchain, and also on the digital euro since various years. Given that a digital euro, a central bank digital euro, can do a lot of changes to the economy, but also to monetary policy. And so I'm quite, looking forward to this discussion, given that we will see very different perspectives also on this subject. And so I'm looking forward to kick off this discussion.
Great. That concludes our panelist round for today. And Cyrus, you already teased a little bit around the topic. You said sort of depending on who you're looking at. So you're referring to the ECB when it comes to the digital euro. I'd be curious to hear also for the sake of the audience to then be able to ask you questions in the YouTube chat, which we're encouraging the audience to do, which will then be brought up later during the Q&A session. Where do you currently see a need to highlight developments within the sphere of the digital euro? Sort of a short round of statements, something that you would like to make known.
Yeah, so I think that, well, I'm indeed focused in my research very much on a central bank digital euro. And I think that the central bank digital euro is a kind of logical next step in a world where more and more things are traded in a digital way. And where I think, in my view, the state should continue to play an important role in providing a good economic infrastructure. And this includes not only streets and bridges, but also a payment infrastructure with the participation of the normal citizens, let's say. So, and in this understanding, the digital euro project, the central bank digital euro project, is above all a new payment infrastructure for the private households and businesses. It's not a store of value. This has been more or less excluded by the announcement that the upper limit for holding the digital euro of the central bank will be rather low. For business, it will be indeed at zero. Thus, in a way, it's also a strategic policy to diminish the role of foreign payment providers in the eurozone and to maintain the control over such an important infrastructure, which could also be misused if it fell in false hands. And certainly there is some focus on the dominance of American payment providers in this respect. But for a more positive reason for the implementation of the digital euro, I think it's the idea to make a further step towards integration of the eurozone and having a very common payment system where everybody can participate at the same standards.
Okay, shall I pick it up from there? So yeah, from my perspective, I mean that's interesting, and I mean we have a very dynamic and rapidly evolving environment around digital euro, and that is in its various forms. So there's the wholesale CBDC, retail CBDC, non-bank stablecoins, bank stablecoins, tokenized deposits, deposit tokens, e-money tokens. So there's a whole bunch of things happening that's making this very interesting, and I don't think they're necessarily mutually exclusive. On wholesale CBDC, I question to what extent the central bank needs to provide a DLT-based rail, as opposed to the ability for participants, so those who need to access central bank money, to access central bank money in a very efficient, fast way through 24/7 all year round. So the current trials are going on, whether it's Bundesbank trigger solution or the TIPS solution or the Banque de France DLT solution. It'll be very interesting to see what comes out of that in terms of the findings. On the retail, yeah, I'm still not convinced, or I'm not sure the real benefit. I mean, of course, you could, and maybe Cyrus, you could expand on this. Of course, central banks could inject, or the governments could inject fiscal measures directly to the citizens of the European Union. That could be quite interesting in terms of the use or the storage of those of that retail CBDC. Would it be possible? You know, that we know there's limits. Would the CBDC be able to be held on the balance sheet of commercial banks, and therefore could be converted to commercial bank money and then used for loans into the economy, or does it become just a store of value proposition for commercial banks as potential wallet holders? So some interesting questions there. Stablecoin, of course. yeah, there are potentially issues with stablecoin in terms of stability and liquidity fragmentation. There's some interesting initiatives happening, and Mika is supporting the proliferation of some stablecoin. Hopefully later this year, we might see something coming out of the banking industry, which is interesting. And then I think in terms of the long term, deposit tokens or the tokenization of customer deposits at banks and making those available on DLTs is very interesting, and I think is possibly one of the more promising areas, in my opinion.
Perhaps if I can take it up from there, and I think this discussion already shows what a whole spectrum of solutions we're probably having under development, which is why I would see it more as a learning curve that we're hopefully trying to make. What is perhaps interesting about the proposal that we made in terms of the legislative basis that we proposed in the middle of last year is that it is actually part of a package. So we proposed a draft legal base for a digital euro, but we at the same time also provided a improved draft legal base for cash, which already shows that we target a variety of payment solutions and not just one. And I think perhaps if you focus for a second on the first part of this package, so the digital euro through the central bank system, in a way, as has already been alluded to, it's a political project. It's a political project to improve the resilience of Europe compared to dominant payment solutions outside the eurozone. It is also to enable the decision makers to learn, because we think very strongly that they have to adapt actively to the emerging digital payment landscape, where this is a part, albeit a small part, but perhaps an important part. We will see that. And also, one of the key drivers was that there is an alleged reduction of cash as still the dominant means of payment in a couple of countries. In Germany and Austria, it's still more than 70% cash payments. Now, I personally doubt very much that cash is in decline. I think that in many places in Europe, we see that actually it's not possible any longer by state decision to pay with cash, but I don't think that demand for cash as such is declining. But it's certainly important indeed in times of more digitalization to come up with increased digital solutions. This being said, this is certainly not the only project that we are supporting as the Commission. I myself am working a lot with industry, but also with parts of the banking and finance sector, for example, to look into wholesale payment solutions. This would be functionality that is currently not visible in the mainstream view of the digital euro project as such, including micropayments, machine-to-machine payments. Everything that Web3 needs is for me an absolute priority. And I think this, of course, is a discussion where the current preferred design of the digital euro does not reflect that. So that for me is a call for even more activity of the private sector to demonstrate the use cases. And it will be very interesting to see to what extent that impacts the public decision, because as you know, the Commission proposal is now in discussion with the co-legislators, so basically by the European Parliament and the Council. We hear that at the beginning of April, there is a vote scheduled in the European Parliament and the Econ Committee. There have recently been very interesting developments, a couple of members of the European Parliament calling for DLT-based solutions as well that have my full support. Actually, it was very important that at least in the Commission proposal, we left the door open for that, because at least I am a very strong supporter of anything that is based on DLT, because I think that's the future in finance. And last remark, it's indeed very good, I think, that in this discussion round, we also broadened the field to include stablecoins, but also tokenized deposits, tokenized assets, etc. Because I think this is also something where we will have very interesting discussions about forward. The US are preparing legislation for stablecoins. We know that 99.8% of the stablecoin market globally is currently dominated in dollars. So that will be an interesting development where we have to see how that impacts us. Perhaps another call for more diversity and also non-American solutions. I think personally the future lies in the tokenization, because I see a lot of problems that we also have already shortly alluded to in the field of CBDCs, but also stablecoins. For me, both are perhaps more transitory solutions than something that can really fully cover the needs of especially businesses. But there we are still at a very early date. And as long as we have competition and progress in all of these areas, it will be a very interesting trajectory.
Oh, wow, thank you. I would also just like to add just a little remark to all that. When I look at the digital euro, I always try to look at it through the lens of our clients, because we do many different projects with different clients. And that always leads us to not looking at the digital euro, but at digital euro payments. So it's more about how can we use it, where can we use it? So when I think of classifications of the digital euro, I think about how and where do I use it, or where do I pay with it? And it's a big difference if I want to walk into a store as a private person and pay for something, or if I want to do something on a blockchain because perhaps I have a tokenized asset or an electronic security, crypto security, or if I'm a CSD and I want to facilitate delivery versus payment, if I want to do reconciliations and offsetting between banks, if I want to get a credit or loan. These are all very different use cases where we can always think of the digital euro coming to us in a different form. And I guess it's important that the euro follows me where I go. It has to be in the system, it has to be in the technology that I want to use for my specific use case. I'm not saying that we don't need bridges. I'm not saying that the ECB should put a stable coin that is a CBDC on the Ethereum network. There will always be integrations between systems, but I'm saying there should not be too many media breaks. So if I want to do something on a public blockchain, perhaps it would be nice to have a euro representation that I can use for payment on the blockchain. Whether that has to be a CBDC or a MiCA-conform stablecoin or something else would depend on the use case. So I always find it important not to discuss the digital euro as a whole, as a standalone topic, but to discuss it in the context of a specific application of digital euro payments. And there we see a lot of stuff going on, as it was already mentioned in the ECB trials right now, where we have wholesale CBDC actually in experimental and trial phases. But we also see it in smaller use cases where we have, as I mentioned at the beginning, pay-per-use applications where I don't want to pay for a machine on a monthly basis, or I don't want to buy the whole machine, but I would rather purchase for specific cycles of production. And there it helps a lot to have a currency in the same technology, in the same system, as I have the representation of the machine and the representation of what the machine has done. So that's perhaps the most important message for me, or the most important aspect to focus on. Whenever we talk about the digital euro, we first make sure we understand the use case for which we need it, such that we can really discuss what the requirements for that type of digital euro are. That's just my opinion on that one. And back to you, Sarah, I guess.
Yeah, I think this little round illustrated beautifully what different aspects can be covered. You already mentioned mostly all of them, Roberto. You actually made a little enumeration here, naming all of the different things, essentially said very, very just in everyday language, basically, but that can be called a digital euro. I think that's already the first conclusion. Now, with some of the news coming out around the European identity wallet recently, Joachim, you also mentioned the decision to be taken now by the econ, for example, as well. Those are just two examples, next to also MiCA being ratified this year and then coming into effect beginning of next year. Those are just some of the developments around those different types of digital euros. So which developments can you, from your perspective, think to happen within 2024 as we're going forward, so in the very near future?
I think perhaps then I start because I think you just referred to the two things in our domains. So we are, of course, following very closely the decisions by the co-legislator. It will depend on how the political process goes, whether there will be a decision in the last quarter of this year, obviously meaning it's the new European Parliament. You know that we have European Parliament elections in June, which will heavily affect the composition of the European Parliament, also in terms of political groups there. So that will be interesting to watch. We have a lot of elections also in the member states that affect perhaps the views that the council will take. So ideally, the process will continue so that there will be a political decision maybe at the end of the year. This being said, these very optimistic timeframes of having solutions ready as of 2026 and later have already been questioned by a lot of people publicly in this discussion here. I can only reflect that. I think 2026 is very ambitious. We will probably look at later years. We have, as you know, the European Central Bank, and Mark is here also representing indeed a number of parties there. They work on the preparation phase, also preparing the technical solutions with now the procurement efforts also to look into the providers of technical solutions and being more concrete on this. That will progress until the end of 2025 when that 2-year period will end. But in parallel, we have other things. You mentioned already the public wallets. We have a lot of activities currently which are very little known actually by the outside world on our work on blockchain solutions that use what we call verifiable credentials. So basically where you put documents in the domain that are secured in terms of integrity so that they are valid through, on the one hand side, the value chain in production to detect fake products, but also when you, for example, need to go abroad and need to have your social security certificates, or you go to another university, you need to prove that you have a certain diploma. We use a open source public blockchain system developed by our colleagues in Digit that have an excellent website and an experience center actually on that to promote this work. And of course, that might reflect on how we see in the future the approach towards digital identity. At the end of the day, much of what we're discussing here is about digital identity, where I would not go so far as saying that we can expect broadly encompassing technical solutions from the public sector in a foreseeable future. That is also because of demand questions. I mean, if you look clearly at what people want, people focus very much on privacy and data protection, as do I. I think that the general data protection regulation for me is the basic law of everything that we do in crypto, because it defines on how we see data flow and people in a digital domain. And everything that is not 100% in compliance with our strict privacy rules, in my opinion, is not acceptable for the public domain, which very clearly puts a question mark on the narrative that the digital euro that we're discussing now with the central bank system is digital cash. In my opinion, it will not have the functionalities of digital cash. That for me is completely excluded. Because even if you accept, and I have no reason to doubt that there is no will of people that have access to data flows to monitor your transactions, etc. The mere fact that things are theoretically accessible in the public domain means that there is a risk towards privacy that keeps people away from that. And we have made a study on this where it's clearly shown that consumers, but also business in Europe, are very skeptical to public wallets and have a very strong preference to private wallets, which I share. So there's, I would say, a lot of technical developments, political developments in parallel, a lot of uncertainty as regards the composition and the continuation of the political process, which simply means that we have to take very small steps. That's perhaps my last remark in answer to this. I've taken a metaphor recently, which is perhaps a little bit silly, and I did it in other domains, but I would like to use it also here. A lot of discussion is on how good you can swim, but sometimes it's important not to drown. And this is something which I very much stick to, actually. I think you need to have a certain ambition in what you want to reach. But the merit, for example, on the preparation phase that the ECB has right now is to take very small practical steps on actually how things work to improve the learning process. And this comes from all sides. This comes also from the private parties that are engaged in this. And this, to me, is a very valuable proposition, and perhaps therefore we should be for a moment less ambitious in terms of where we really head in towards completely, but accept that we have a competition of very different ideas, public and private, and also in cooperation, and see what the next concrete steps will be, what the market will take up, and then what will actually be perhaps in a growing curve over the next couple of years. But for me, that's completely uncertain at the moment what that will be.
Yeah, I think that a digital euro, be it a central bank digital euro or be it a stable coin, has really huge potential implications for financial markets, and we should make use of it, because the most important implication is that you can really trade much more efficient and much more riskless securities, which are tokenized, and you can interchange it at the same time against stablecoin or a settlement coin, which could be the Central Bank Digital Currency. And you can also custody, save a lot of money in custodizing the securities on a digital distributed ledger or on a private blockchain, which is administered by the central bank. So I think here is a lot of potential for financial markets, and I think it's right to have still very much the private sector in this area, because indeed we don't know how quick the central bank is going forward, if it really will have a result in, let's say, 5 years or 3 years or so. And obviously the private sector always delivers new ideas, which can be also caught up by an official central bank digital currency. So I think it could be a very fruitful process. So I would indeed support both ways to get progress here.
And I mean, since you asked like what will happen in the near future, I think we have something really exciting going on right now, which is the ECB trials and experiments. It's happening already, right? The productive phases are about to start in the next weeks, and I find it very interesting that the ECB has actually said that whoever wants to participate should operate some sort of market DLT. So they are basically saying, we really want to target those of you who already have securities, assets on a blockchain basis available. You have the technology available around digital assets on DLT. And now the ECB and the three regional central banks are responding to that with different solutions. And I find it very interesting to see how different these solutions actually are, that you actually have some sort of, I want to call it a bridge in the Italian case, perhaps, where you would say you just stay on the same ledger as you have the asset, you just deploy an escrow smart contract, basically, and do payments in classical systems, or you go all the way to the other end where you would have the French solution with an own network for the digital euro representation, or the Bundesbank kind of in between with their trigger chain. And I think this is something that we can really see in the very near future. We can see how market participants respond to these offerings, right? We have these three very different solutions, and we will see how they are picked up and how the integration works. And we will learn so much about what market participants think of these implementations and how they connect and what the difficulties are in all these different solutions. And I do speak to market participants who kind of expect that the solutions will still be there in the future in this exact way. They kind of expect that a trigger solution, a hashlink contract, or an on-chain, these things will exist in the future, and they're preparing for payments using these technologies. And that is, I think, something that is really right in front of us right now. We can learn what will be the most promising, what will be the best, the most integratable solution in the domain of delivery versus payment for digital assets, and not just in Germany, all over Europe. And of course, we're also looking at other central banks, how they're doing it. It is a very interesting and exciting field right now to be in, because there we really learn a lot.
Yeah, I agree. I think taking it, let's say a step either lower or higher, depending how you look at central bank money. We have lots of interesting initiatives around the tokenization of customer deposits, or deposit tokenization. So we've got the commercial bank money token exercise happening in Europe together, which was a bunch of banks, including Commerzbank, and some industrial corporates who are helping define the key use cases. And that's an important point, which maybe Mark alluded to earlier. The use cases in this instance is really coming from industry. So and that's how it should be. It should come from ultimately the customer. So that particular project has undergone a recent POC, and there'll be findings to be published soon. But in essence, what it's demonstrated is a real need and a real interest in having a commercial bank money token or tokenized deposits. Of course, ultimately there would be a settlement with central bank money, and it could take a kind of regulated liability network type of view where you have CBDC embedded. That could be an option, or other forms of settlement, which could be wholesale stablecoin or wholesale. How would you call it? Maybe a synthetic CBDC. Maybe that's not the correct term, but wholesale versions of central bank money developed by the private sector. So using a technical account or omnibus type accounts that we see out of, for example, out of the UK with Finality. Just a disclaimer: we're investors in Finality. So yeah, lots of interesting things. Again, none of these things are mutually exclusive, I don't think. So we'll probably end up seeing a host or a mix of all of these solutions in place.
Just a quick question. These tokenized deposits, they are only available in your to the project participants, or is the idea to have really a kind of stable coin which is so it's a widely used tokenized deposit?
Yeah, so it's basically taking existing deposits and making them available in a digital form on a DLT. So in this particular case, it's a multi-bank stablecoin. So there's fungibility and transferability between banks on the protocols that were tested. So yeah, it is. The sweet thing about that is we think the regulatory lift is not so heavy as in terms of getting acceptance. It's just deposits in a different technical form. So yeah, in essence, that's what it is. Yeah, we tested it on a variety of systems, and it worked rather nicely.
If I may add a question, Roberto, because I always find this interesting with tokenized deposits. If you look at a tokenized Commerzbank deposit token, and I would then send that over to a client of ING or Deutsche Bank, it would have to change its color on the way.
Correct, yeah.
Can you say how you would solve that problem on a blockchain?
So in this particular instance, there's an orchestration of a transfer or conversion of the token into the liability of the other institution, and then the institutions will net clear or gross clear between each other.
On Ledger?
In essence, on Ledger, yeah.
Cool. Sarah just posted a question about ventures.
Was more of a side remark.
Right.
So what we see happening is obviously not just tokenized deposits, stablecoins, e-money tokens, CBDCs of various sorts coming to Europe in a slow pace. It also is the case that these different forms are influencing how they can develop within their own field and how they're perceived from the outside. For tokenized deposits, obviously, we have the argument of the power of the balance sheet that is backing that endeavor in the eurozone, which is obviously something that banks, as they exist, are more keen to explore. So that's very interesting. Sort of what players are coming into which of these developments of the digital euro forms. But looking at things from a slightly different angle, now we already talked about some of the requirements, how we can categorize different types of digital euro, but what would actually some of those players that we already mentioned, so such as legislators, central banks, and payment providers actually have to do to mess things up for those various forms of the digital euro? Joachim, simply because you mentioned the issue of privacy, I think I'm going to have you go first.
Well, the privacy part is the easy part, because it's like decentralization. You probably never fully achieve it in a way, but you should at least target it. So what I found more interesting just listening to this highly interactive discussion is actually how practical it is on so many fronts. And indeed, Sarah, when you ask of what could best be done, I think a dialogue between the public and private sector is a very important thing. Our colleagues in DG FISMA, I think, have just launched a call of interest for an event we're organizing on the 11th of June when it comes to the tokenization of assets and deposits. I think that for me is something that I can very highly support. And there's a lot of activities going on in the similar vein, I must say, to see on what is practically feasible. The same is with the work on MiCA now with the technical standards. I mean, we all know that it is one thing to have a document out there like the draft legal basis for a digital euro or like the MiCA regulation, but that's only the start of a process when it comes to, let's say, standardization, interoperability, learning of all the people involved, not only at the European, but also at the national level in the business community, which is why we are in parallel creating sandboxes. We have the DLT pilot. We have a lot of co-learning activities where I would say in a market on technical innovation that in human history has never been as rapid as in the field that we are talking about. This is basically the essence. There is no time anymore, in my opinion, for a focus on one specific project that is supposed to be dominant, that will not work on the market, but really to go very much into the practical questions of actually when we talk about industrial projects, looking at wholesale stablecoins or digital money or however we are going to call that. Everyone is working in their respective fields, but indeed, how do you ensure the transferability, the interoperability of these systems in practical terms? What are actually the concepts, also the definitions based on that? How can we get enough people knowledgeable in the programming of what is needed in order to develop these interfaces in standards? What would the repercussions be not only on crypto regulations, but other fields of regulations? Take AML, take other areas that are not primarily crypto regulation, but have a very unfortunate effect on crypto sometimes. And then I've not even spoken on things like Data Act and DMA, DSA, and things like this. So we will get a new European Parliament where probably 60% of the European parliamentarians will be new. We also get a lot of people at the national level that have very limited experience with that. And some countries have progressed very much. A couple of them have already been mentioned. But I think what we hope to see is a massive push from industry to show us what can practically work. Because I, as a policymaker at the end of the day, have no interest whatsoever in pushing top-down any solution. Blockchain is a decentralized solution, so we need to see what works on the ground. And this results in very practical questions. I'll give you one example. We have massive discussions, for example, on zero-knowledge proofs. I think that they can play a very important role in ensuring privacy. But I also have a couple of people out there, very advanced people from the decentralized space that tell me actually they're not so much convinced about ZK proofs. The current applications. So this is the kind of granularity in the arguments that we need to see, and not only in a theoretical way of is this really good or bad, but when it is implemented in specific solutions, what does it deliver and what cannot be delivered by that solution. And unless we really have a sort of playing field with the documentation, with the repository of very good and easily accessible information for everyone on verified and useful information on this, I think that we might move in 1,000 directions without really seeing the forest and only trees. And this is perhaps something that is now very much in the mind of policymakers and regulators in Brussels. We are at the end of a 5-year cycle where we brought a lot of regulation forward. But what people now think across the institutions is that with all these new regulations and rule sets and initiatives, we indeed have planted a lot of trees, but I can't see the forest. I can't see the consistency. I cannot see really where all of this comes together. And if we focus a little bit more on this from a bottom-up perspective, driven by all these use cases, that for me is a much better learning experience than reading 10 more theoretical papers.
I would like to add a question to us panelists in this respect, because you talked also about stablecoins, and this does also fit to one chat question. Because what I wonder is, okay, we did not have really a meaningful eurozone or euro stablecoin, which was quite good. Well, it was no wonder, given that all the years before we had zero interest rates or negative interest rates, and so it was not a business model to have digital euro backed by real euro with a negative interest rate. That would be a loss. Now interest rates are up, but still we don't have a really meaningful stablecoin in euro. And I ask, well, I don't know really why is this so? Why is the stablecoin on US dollar so dominant? One possible explanation is certainly that well, all kind of commodities are traded in dollar, and so are crypto assets, and crypto assets are the main transaction which are done with US dollar stablecoins. But anyway, so it's still for me a kind of conundrum that there is no emergence of a euro stablecoin. Any ideas in this respect? Because it would be so important for the further development of the digital euro space.
I have a theory, but it's really my own theory, right? I personally think that there's just not a lot of money in the creation of a stablecoin. So if that is the only thing that you want to do, if that is the only business model that you want to stand on, there's just not a lot of money to make with just that. It goes back to what I said earlier, that we usually look at payments. So it's usually you create something to facilitate payments. So you usually do that in some other context. So you already have a solution based on DLT, and now you want to add a payment solution to it. I think that can work, but I guess there are many market participants are hesitating now because they're kind of looking at others to go first. I've actually talked to some clients of ours, and I've asked them, so would you like to issue a stablecoin to make your to bring some more flesh to your tokenization use case? And they then answered, well, no, but we have Clearstream, the CSDs should do that. We're all looking at them, right? So why don't they come up with a stablecoin? So it's kind of clients in our clients in that field, they kind of point their fingers at others and say, hey, they should go first. And they do not really want to step into that game yet, apparently, because there's perhaps too much risk in there, and there's not a lot of money to be made just with a stable coin itself. Why do we have the US dollar stable coins more? I guess that's just a network effect. They were there first, and they are used very broadly all over the DeFi space. And now why change? It's an established stable coin, and it has lots of the market for it. So why would you add a euro stable coin if it's in the DeFi space not really required? But that's just really my theory about that. Welcoming others.
Yeah, my 2 cents on the topic. So I think you're right in terms of the dominance of Tether in this case, which is massively dominant. I mean, I'm looking at my screen, 104 billion market cap versus Circle, which is 32. So there's a big gap, and I think that's a lot to do with let's say critical mass. Obviously, there would be other DeFi type of instrument mechanisms such as staking, where maybe it's there are better yields with Tether. But I think the business model. I mean, there are euro stable coins, and a source did tell me recently that the participation in dollar stablecoin is around 50% are from Europe, which is interesting. So that means Europeans are taking the round trip in FX out to dollars and back into euros, which is odd. And you would expect that a euro stablecoin would be more popular. It'll be interesting to see what happens in terms of the business model. I mean, it's for sure you need to that net interest income, which maybe hasn't been so attractive in the euro area. I mean, in dollars, you see the P&L from Tether has been enormous. So it's around 3 billion a quarter for a relatively small number of people, and it owns something like, I think it's the 17th highest owner of US Treasuries, and so that begs a lot of questions. So for euro, it'll be interesting to see what's happening. We know that there are institutions working on a euro stablecoin. It'll be interesting to see how successful they are in winning back some of that business. I think the critical mass and that network effect plays a big part of it, though.
I think perhaps to add on that, and also because we have questions on this as well, we should not perhaps overestimate the role that MiCA will play in this regard here. I mean, when we talk about stable coins, we talk about e-money tokens, we talk about asset referenced tokens. Now, e-money, we already had regulation out there. We indeed have euro-denominated stable coins. We have Monerium, we have Circle, we have others as well. The basic argument in the past has been referred to, which were the negative interest rates. I mean, there is no guarantee given the current rules and the impact that negative interest rates would have on the business model that we might at a certain moment revert to that. It's not really likely given how inflation goes, but you can certainly not exclude that. And when you have such a very thin layer of where actually your value proposition and your money from the business case is coming from, then you're running a massive risk. I think that the dollarization of stable coins is a temporary issue. The dollar is massively decreasing in terms of the role as reserve currency in the world. It's now less than 60%, has been more than 80%, I think 10, 15 years before. I think looking at geopolitical developments, we will see in the future a massive rise of non-dollar solutions from a lot of areas in the world. I don't know to what extent that will affect stablecoins as such, but what will certainly massively affect is the tokenization of RWAs, is the tokenization of basically everything around there to create a true, let's say, Internet of Value in a Web3 environment where you can tokenize real world assets and then use them also for payment purposes. At the end of the day, I think where we're heading to is a system where we are not trading money or finance, but where we're trading value. That is what actually blockchain has been made for. And the interesting thing for me is that value is a normative concept. It's not a positive concept. And I think that this is the way how money should actually be regarded. Money is never, in an absolute sense, stable. It's neither the euro nor the dollar. It's a belief system. And the belief system is a very broad system that also relates to everything else that can have a value that has been around there. And this is for me the true merit of seeing also all the blockchain-based systems that have been referred to in our discussion so far. So for me, it's interesting to see, of course, to what extent stablecoins are euro or dollar denominated. But I think in 5 years from now, we will probably have a very different discussion as regards modern payment systems and what will really be the transfer mechanisms of value. And I would very much doubt that stablecoins play quite significant role in that time frame.
I think, Joachim, when you're speaking now, you're referring to potentially the market cap of those stablecoins. But what about the development of a CBDC right now being influenced by the fact that euro stablecoins and e-money tokens exist? Do you see, in general, a threat for the use of the euro as a currency in the future if we do not have a retail CBDC, for example? Or also, how would MiCA, for example, influence the work that is currently being done on the CBDC? Is that already visible? Or are you expecting that to become something visible in the future?
Sarah, that for me are different questions. Maybe I'm overlooking something, but I mean, I truly don't see any impact that the success or not of a retail CBDC would have on the euro as such, because I mean, if a retail CBDC, the way that it is designed, should be successful, I think it really has to massively bolster up the use case that is behind it. I don't think, even if that will not fly, I don't think that there are massive repercussions to the euro, because there are all sorts of other systems, as we have discussed, on the euro. MiCA as such, the way that we designed it as the Commission, should not be forgotten that the biggest part of MiCA was drafted 2 years before Libra. So basically, this was an attempt to really liberalize and use the opportunities for the crypto space in a decentralized manner. It was only through Libra that actually the whole stablecoin block came into MiCA. But I would very much warn against reading MiCA from the end to the beginning. So from the stablecoin part, MiCA's value, in my opinion, lie in the first parts, where it is basically on all the exemptions, where it is on the utility token part and not primarily on the stablecoin part. Stablecoin part will contribute to that discussion. But we will see in the next couple of months who will go through that door. That also depends very much, of course, on the standard setting that the EBA and ESMA are doing, where we have a lot of animated discussions, I would say, to put it this way. And I would not really have too huge expectations on that. But the more interesting discussion we are having is, of course, outside the domain of today. That will be DeFi, that will be really decentralized systems that are also being used by DAOs, for example, in Web3 environments, where the frontier of the current development is. The rest is mainstream. It is very important for industry, completely agree, because most of industry is risk averse. Most of industry, but also citizens, want to work with something that is either from the legacy system or compliant with the rules of the legacy system, which is what we're basically discussing here today. But the effect or not of a retail CBDC for me is a minute part of the crypto finance spectrum that we actually have. Last remark, please take a look globally, even in countries that have the internal political power like China to basically impose on their population everything they want. CBDC projects globally are, if not saying stalling, but are slowing down massively all over the place. 2-3 years ago, we've always focused on the fact that 80% or more of central banks are exploring CBDCs. But look at where they stand now with tiny exceptions that, of course, are nice to have, I think they all learn how hard it's actually to use these approaches to bring meaningful solutions, and that perhaps other better alternatives are out there. So I think, honestly, the CBDC discussion is overrated.
In regards to time, I think it's a good point to come in now with sort of the closing statement. Joachim, I think you've already done in a way. So I'm handing it over to Mark. I think he wanted to comment as well.
Yeah, I just wanted to go on because I wanted to come back to a question you asked earlier about how we could mess all this up. And I think we have to make sure that we bring in a lot of standardization. I think that is also something what Joachim pointed out earlier. People have to talk to each other. But just give me a quick second. I noted one thing down earlier that I wanted to say. Right, it's the discussion that's going on between commercial banks and the central bank right now that we see a lot. The central bank clearly says that they want to get into the digital euro space here because they want to make sure that all they want to do, like the monetary policy, financial inclusion, everything, all that takes place under their radar. And commercial banks are sometimes claiming that the ECB is overstepping their responsibilities here and taking actions that the ECB shouldn't really be doing. And I think that is a very dangerous discussion that is going on because that will just hinder the usability in the end of the digital euro, because that is something that is really, really important in the end. And that is also why some of the projects are stalling, I guess, internationally, is because the digital euro has to be usable. It has to be well usable, right? If I walk into the store, it has to be just as easy to use the ECB issued euro as it is to use Apple Pay. If it's not, then obviously these digital ECB CBDC solutions will not prevail. So I think that is something that is quite important. It's focus on usability, focus on making sure that the euro that you create can be used for payments in the environment that you created for. And I think that is just the most important aspect here, that whenever you want to experiment with the digital euro in whatever form it is, make sure you pick the right form of the digital euro for your ecosystem, for your use case, and really explore the payment processes with all that is entailed from KYC to settlement. But this is just the hint I can give to anyone who's watching and is thinking about experimenting with the digital euro. Pick the right euro for your use case, and then look into all the facts and all the effects of that currency that you've chosen. Who wants to go next?
Yeah, I agree that there will be quite a lot of uncertainty on the introduction of a central bank digital currency. I hope very much that the legislators are also seeing the potential of advantages that this a good designed digital euro can bring with it, and I think that this goes into the direction of a deeper integration of the currency union, a new step in integration of the currency union, given that it will be possible to have payments at a common standard. And I would also say this is not to be interpreted, and I think that it's not designed in this way as an attack to the private sector, but on the contrary, it's a framework, it's a basic on which innovations can be put on and developed further and to the individual use cases, because it will be only a basic use of the digital euro, and all the more complicated tailor-made things will be offered by the private sector. And I think that this brings huge potential for the economy.
Yeah, and just to add on to that, I mean, look, we're in an amazing situation at the moment where so much innovation is happening, and I think we have a real opportunity with this technology to drive substantial value to industry, to drive significant efficiencies, reduce systemic risk in the system by improving efficiencies with the general adoption of DLT technology across not just cash but also assets. And of course the public-private collaboration needs to be there, as does the collaboration with our corporate customers to understand their needs and to help drive benefits to them. So super interesting times. It's going to be very interesting to see what happens 24, 25.
Certainly, and obviously also beyond that. So we'll watch out this year for more developments coming out, for example, from SAP announcing their stablecoin issuance, to name just one of the developments, and the likes. And I'm sure it's going to be time for another status update soon again on this very topic. Thank you for sharing your views today, very diverse ones, if I may summarize. And with that being said, I will see you next time, hopefully for the next panel. Thank you to you, and then also a big thank you to the audience for being so active and asking so many questions.
Thank you very much.
Thank you.